Today we will talk about this frightening paper gold versus physical gold ratio, and you will learn what this apple has to do with your investment portfolio. Before we go any further, I have one question, just one question, and this simple yet ridiculously powerful question is why? Why do we, the investors, invest in gold? Why do we invest in silver? Why do we invest in precious metals? The stock market is growing like crazy these days, so why do we need this gold? Now, we all know that it does not produce any income in the form of interest payments or dividends, and you certainly know the answer. We invest in precious metals. Physical precious metals, I mean, mostly in gold, because gold is a hedge against inflation, hyperinflation, microeconomic risks, macroeconomic risks, and so on. So it's always a great pleasure to realize, to know that your investment portfolio, your wealth, you are protected. But look what I have here. Paper gold versus physical gold. This circle represents the gold market. This red segment is paper gold, options, futures, swaps, ETFs, gold certificates, and so on. This tiny blue segment is real gold, physical gold that you can hold. Now you might have two questions. The first one is, hey Alex, where did you get this information from? And the answer is quite obvious, from that gold investment guide that you can also get by clicking the link below this video. The second question is, what about numbers? Could you be more specific? Of course, I will be more specific. Casey Research conducted a study and found that there is a high demand for gold, so there is not enough registered gold backing the gold certificates that are currently being sold and traded. And now the most important part of this video, the numbers. At one point there are 252 claims on every 1 ounce of gold available. Do you understand what it means? 99.6% of the gold market is paper gold and only 0.4% is real physical gold. Once more, mathematically, $1 million invested in gold by the crowd is $4,000 invested in physical gold, gold coins, gold bullion, and $996,000 invested in paper assets that have nothing to do with real gold. There are another studies and research, by the way, there is a video on YouTube, and they say that today's paper gold to real gold disparity is 542 to 1. So this tiny segment might be half as much. Zero Hedge, a well-known and well-respected website, published this diagram. There are now 293 ounces of paper gold for every 1 ounce of physical gold. They wrote 3 years ago. 3 years ago, different studies, different research, same numbers. 200 to 1, 300 to 1, 500 to 1. What does this all mean? Well, it means that in most cases, in the overwhelming majority of cases, people invest in paper gold, in promise, in other words, not in real physical gold, and they believe that somehow they protect their savings. How? And there are reasons for why it happens. So it's commonly known that physical gold has its disadvantages. I have a video here about disadvantages of investing in gold, like you have to pay storage fees. Storing gold at home, even in small quantities, is relatively risky. It's a little bit difficult to sell your gold coins or gold bars immediately in the middle of the night, for example. Paper gold, on the other hand, gold ETFs, for example, which track and reflect the price of gold, also are considered a hedge against inflation and other bad things. There is no need to pay storage fees, there are no counterfeit risks, and buying a gold exchange traded fund is probably the easiest way to invest in gold. One of the most popular gold ETFs, by the way, has a ticker symbol GLD. This is how it behaves, just like gold. But if something bad happens, yes, I am an optimistic person and I do believe in a bright future, but with all these things like the national debt, the derivative bubble, interest rates panic, we can expect that the next financial crisis will be of a far greater magnitude. Some people, some well-known personalities, some experts say that the greatest wealth transfer in history is coming. So this is why we invest in physical gold, in physical silver, in physical precious metals that you can touch, that you can hold, and that you can use in case of collapse of economy. You might say, hey Alex, we are living in a digital world. You are living in a digital world and I am living in a physical world because I need physical food to feed my family. I need a physical, touchable house to live in. The situation with paper gold to physical gold ratio and with the gold market as a whole reminds me of apples. Here I have an apple. I'm a healthy living enthusiast, as you know if you are my subscriber, and I know, and you probably heard, that an apple a day keeps the doctor away. That's right, but I have the question. And it's a really important question. When did you last see an apple worm? I remember when I was a kid, we used to eat a lot of apples and we had to be very careful. But today it's not a problem anymore. And today, a tiny apple worm, which is the sign of quality, which shows that this is a natural fruit, can shock some people. This apple, look how unattractive it is, but this apple a day does keep the doctors away, because I know who, how and where grew it. What's the point? People eat apples as a normal part of their diet, including these giant, unreal, genetically modified apples or so-called organic apples, and they think that they improve their health. Just like they invest in paper gold and I think that they diversify their investment portfolios. Yes, in a manner they do, but there are a lot of huge buts. The paper gold to deliverable physical gold ratio, I think, is only expected to rise. Let me know what you think in a comment section below this video. And that's great, and you know why. The rarer an asset, the more valuable it is, and physical, touchable gold is extremely rare today in comparison to paper gold, which in fact is just a promise to give you gold. And promises, as we all know, can be broken. Therefore, ladies and gentlemen, including physical precious metals to your investment, to your retirement portfolios, might be a smart choice. I am not a financial advisor, And I don't know what you should do with your money, but I want to share with you a great opportunity to do it tax-free, without any penalties or fees. Just click the link below this video or click here and get your 100% free gold investment guide. Let me know what you think about this ratio, this disparity. This is absurd and ridiculous, isn't it? Subscribe, I will be happy to see you next time.